and we came all the way up to here. Initially, we was targeting the highs, but at the highs, there are actually fair value gaps approaching the highs, and this could be an indication that price is actually about to fail, and we could actually have a lower high presented, and price could actually retest the lows and come and fill this imbalance right here. So I'm actually watching quite a few on this chart. Hopefully we could break above here and continue to the highs. But if we get over the next couple of trading sessions, if we get a market structure shift, and if you don't know what that is, the internet's free, do your research. If we get a market structure shift, we could actually target these lows down here and fill this imbalance.
Alright, so welcome back, people. Just a quick clip sharing the precision of my trading analysis. That was recorded about 2 months ago, going on 2 months now. And I really take pride in my analysis. I've put in quite some time in, building this sort of accuracy and precision with my trading, called the decline from the top of the range all the way down to our level right here, which we perfectly got. So this week I'm just going to analyze what I think could happen in the markets. We've been trading in this range, just bouncing from a premium of the range to discount of the range. If you're not sure what that is, this level right here, we've got marked out is our premium discount array. Above the premium is, above the line is a premium, below the line is a discount, and this level is also a part of the range. Because when you trade in the range, the price tends to sweep liquidity at the lows, so now we're trying to retarget the high of the range. Do I think that could happen this week? Let's talk a little bit about it. So, this week, if in case you haven't watched my prior video, I recorded a video on Friday just discussing, how I expected price to decline, and I took a short entry, and I managed to pass my funded evaluation phase 1 in 7 days with just 4 trading days. We took 3 trades on that account, and it was beautiful, 100% win rate. So let's talk about a little bit about what could potentially happen this week. So we have recovered the range, but the last couple of days, on Thursday and on Friday, we end up closing within the range. But if you take a look at these 2 candles, they're both what we call doji candles. They're indecision candles, which means the price is just going sideways. So let's take a deeper look at what price is doing intraday. Jump onto the 4-hour chart really quickly. So if you could see from here up to here, we've pretty much just been trading in sort of a consolidation sideways move. Price hasn't really gone anywhere. These are a bunch of liquidity levels intraday. But I wanted to talk about the level of liquidity that I believe is being built up intraday now. So I'm on the 1-hour chart, and if you take a deeper look, this level here, this level failed to sweep liquidity on the during that was set up on Tuesday, and I spoke in a video prior, and I think you should all take a look at that video because it really gives you a good idea of how I trade institutional concepts and what kind of concepts we use. This level here on Tuesday, we had price rally higher, and we also had on Monday we had buyers all positioned into the market from here. In order for the Tuesday sweep to complete, we need liquidity at this level to be taken. So we've still got liquidity here. Just because this is a new week doesn't mean that this level of liquidity is out of play. So I'll keep this liquidity on the chart. But as I mentioned, we're pretty much trading in a sideways move. And if we take a deeper look at what that looks like on the 4-hour chart, it's sort of setting up a sideways wedge consolidation. And when the market trades in these sort of patterns, we tend to have liquidity resting at lower levels. And you could see this right here. And if you're not sure what liquidity looks like, take a look at some of the videos on my channel. I do tend to explain these things. But we've got liquidity resting at this low here. We've got the Monday low liquidity here. We've got more liquidity being built up here. And at the moment, on the daily chart, we're currently trading sideways. Indecision. Doji candle was just a small body, meaning that price couldn't decide where it was going to go. Although we had some indication that price is going to go higher based on the close back into this range, there's no strong emphasis on that. Although we was able to get a long wick up to close, there's not a strong enough indication that buyers want to take control. For us to see that, for us to confirm more of an uptrend, we need price to get into this fair value gap and break through it. Once we get a break through this fair value gap here, we could see buyers get back into the market aggressively, because that would confirm that price is bullish and that price has a lot of momentum to go higher. So at this current moment in time, I can't tell you that I'm favoring an uptrend or favoring a downtrend. Although we're back in the range, I need further data to support an upward move. So at the moment, this range is still intact, but we can't exactly look aggressively for long positions into the market. So I think the best thing to do for each and every one of us, if you're trading the US30 chart, probably the best thing to do is just to give price a little bit more time to give us more data. And all we have to do to be able to do that is just be patient. We don't need to go aggressively looking for long entries just yet unless we get a close above this level, and we don't need to exactly look to short the market down to sweep these levels of liquidity. So my guess is price will just continue to bounce up and down within this range over the next couple of trading sessions, just to build up a little bit more momentum to choose a direction. And because we've got liquidity down here, there is a possibility that we could sweep this level of liquidity and then go higher. So I would recommend, guys, just don't be aggressive in the markets over the next couple of days. Just be patient, and wait to see what happens with price. The more data, the better. If you have more data, that means there's more people, there's more, you'll have a better bias, you'll have a better grasp of understanding on what the markets is doing. If we was to just jump onto the weekly chart really quickly, just want to give a little bit more feedback on what I see going on in this chart. So we did manage to close back into the range, and we did get a green candle print. This is good, this is nice. This could indicate further upward momentum. However, how would we want this market to go up? For me personally, if I wanted to see price go up, I would like to see price first of all come down, sweep our levels of liquidity to gather momentum, and then following the sweep, then potentially rally higher. So that would give us a base down here, sweep liquidity at the lows, getting the liquidity at the previous week's low as well would be really nice if possible, and then we go higher. That would be an ideal optimal trade, and we'd be targeting the premium part of the range again. So that what that would look like would be a slight pullback at the beginning of the week, maybe Monday or Tuesday, and then price going higher with a green candle. And we'd also have what you call a wick to form as a base, like this, and we'd also have a green candle to print up. And that's the way I would love to get into the market this week. If we're able to pull back down into this zone, I will potentially look for longs after sweeping levels of liquidity. But I'm not in a rush to take any trades at the moment. As I said already, the market is printing doji candles on the daily chart. So it's telling us there's a little bit of indecision at this level. So definitely just be patient with the markets. Aim to get into the markets when you've got enough data to support your bias. I just really want to quickly talk about day trading. So I made some predictions on the chart that you saw at the start of this video, and the precision of the trade was very, very high. It was an extremely accurate setup. I kind of knew what I wanted to see prior. I knew what to expect, and not just knew what I wanted to expect. I knew how I wanted to play the market. I knew that when we got up to this level up here, if we saw price shift downwards or the market structure shift, I knew that we'd be targeting liquidity at these lows. So I knew that we'd be going down here. I knew that we'd be coming back to this fair value gap, and I knew that I'd wanted to buy the market when we got into this zone because we was in a steep, very deep discount. Day trading. Day trading is very, very volatile. What this means is because you're a day trader, you have much, much more tighter stop losses, which means if you wanted to get into a position into this market on the 5 minute chart, you would have to sit through all the fluctuations in price. Like for example, the final trade that I took to pass the challenge. I'm not sure if you guys saw the video, but I'll just tell you, I initially positioned into this market on the Monday. I positioned around here. So if you take a look, if I got into this trade here with a day trading stop loss with the intent to target lower levels, this trade was nice though because it fell immediately. But if my targets were all the way down at the level that it was down here, you would see that I would have needed to watch the market go down, watch the market fly all the way back into our fair value gap before eventually coming and hitting our targets. This is why day trading is extremely stressful. The best traders are the traders with wide stop loss, with very precise entries within fair value gaps, and who allow the market to fluctuate against them. Imagine if you got into this trade, you shorted the market down here, and the market came all the way back up to your entry. I can tell you for sure that 90% of traders would exit this market at break even. Furthermore, not just exit the market at break even, they would be reluctant to get short again. This is the psychological aspects of trading. When you look to buy the market or you look to sell the market, the honest truth of it is there are only two directions the market can go. The market can either go up or the market could go down. That's it. That's all the market can do. But in that period of the market deciding where it wants to go, whether or not it wants to go up or it wants to go down, there are going to be fluctuations. And these fluctuations are what catches traders out. You can't tell me that the best way to trade the market is to specifically look for trades with tight stop losses, because you don't give your trades opportunities to play out. And that's the issue with day trading. Day trading causes you to be reactive to the market, and reacting to the market is poor because you're competing with computer and AI systems, quantitative built systems that enter trades based on intraday ticks. You're competing with computers. Whereas when I position into trades, I'm not competing with computers. I'm competing with other traders, other large trading investors, and that's why I say prioritize the higher time frame. You can't expect the market to do what you want on a 1 minute chart, on a 5 minute chart. Look at all the fluctuations you see on the 1 minute chart. I'll give you an example of this right here. So people who trade the 1 minute chart, if you look to enter the market in this fair value gap right here, imagine how you would feel if you positioned long into the market here. You got brought into the market. You have maybe a 50-point stop loss. The market stops you out before proceeding higher to your targets. At that next opportunity to look for a similar trade, you will be reluctant. Let's say you had enough opportunity to enter the markets right here in this fair value gap. You will be extremely reluctant to position into the market here. Why? Well, I can give you a few reasons. Well, you just took a loss. You just took a loss into the market. You don't know if you want to get into the trade. Furthermore, before you can get back into profit, you need to make back the loss you just made before even before you can even be in profit again. So what's that going to do to your psychology? It's going to be like this. You get into the market here, and then you see the market pull back down. What are you going to do here? You're going to cut your losses. You're going to say, I don't want to give this back. And then the market's going to fly right up to your target almost immediately. It's going to mess with your psychology. And I really, really, really urge people, stop day trading. I don't know any consistently profitable day traders that solely day trade. I have friends who swing trade. I have friends who day trade, and I can tell you, my friends who day trade. Well, I don't even really want to talk about it too much, but it's not that they don't know how to trade. They know how to trade. They know what they're looking for in the markets, but it's the psychology of it that really messes them up. And it's really sad to see because I see it all the time, even on YouTube. I see other small traders that are trying to build a following by showing that they know how to trade, and I support that. Like, build a following and try and make a business out of this. It makes a lot of sense. But the main issue is you can't do it consistently, and it's not just you that can't do it consistently. It's hundreds of thousands of traders globally that try to day trade consistently, and there's just too much you have to deal with. You have to deal with the psychology of your trades. Some trades being stopped out 1 pip, sorry, 2 pips stop you out before proceeding your direction, and then you have to try and make back your profits. How many times, yeah, and I used to day trade, how many times have you got into a trade, you've lost that trade, the next trade comes up, and you want to take the trade, but you're scared to pull the trigger because you think maybe the market could go down a little bit further or it could go against you a little bit further. So you're patient, and then you miss your entry. And then when you do end up getting into the market after the third or fourth candle, the market just goes straight against you, and you've risked way more than you should have risked because you have a wider stop loss now. These are some of the things that are problems for day traders, and we've all experienced it. It came to a point for me where I decided there's no way I'm able to predict the market and where the market's going to go on the daily and the weekly chart and not be able to profit from it. So I made the decision to quit day trading and stick only to swing trading. That's why I've developed this system. The point I'm trying to make is, if you want to be able to do this consistently and you want to make good money from trading, you need to start swing trading. The reason these prop firms make so much money is because most people don't swing trade. They don't have the patience to do it. They don't. There's a company called Apex. They charge $20 for a futures account. These futures accounts are only for day traders. You can't hold futures positions overnight. So this is why they're able to charge $20 for a futures account, a futures day trade and prop firm evaluation account, because most people are losing money from it. Most people. So I really, really, really advise you guys, give swing trading a go. If you want to make money in these markets, give swing trading a go. The only people that I know that are popular in prop firms that make good money from prop firms are swing traders. Who can I mention? Bernd, that German guy that lives in Dubai. I'm not sure if you know who he is, but he goes by the name of Bernd. I think that Pascali guy, he's made a few million from prop firms, swing trading. The Andrew NFX guy. If you don't know any of these guys, and I'll give them a shout out, but just pick up to them, man, because they know how it's done. Swing trading is the only way to make consistent profits from the market without going insane, without having psychological breakdowns, and it's a lot more stress free. But yeah, that's all I've got for this video. I'm gonna cut it short here. I do recommend you guys give my 7 days video that I released on Friday about me passing my funded account in 7 days with a high win rate strategy. And that's another thing with these swing trades. The win rate, I win more trades than I lose by quite a high factor. From my back testing, I believe this system is about 80 to maybe between 80 and 90% success rate. So yeah, I'm gonna leave it there. I've got videos on how to trade this account as well, how to swing trade US30. It's a video as short as 5 minutes. But yeah, let me leave it there. Wish you guys the best of luck in the video. Hit the subscribe button because I will be releasing more videos as well. And yeah, I'll see you in the next video.